Okay, here we go. I'm going to try to entertain you as best as I can before Tom comes up, so I apologize about that. For those who have not been here before, usually kind of right after we do introductions, I'll show you what's been going on in the market. I'll give you some tools in case you're newer and you don't really kind of know how to get started. If you go to our website, northidahorei.com, we have a free tools tab. And if you just need to analyze a deal, but you don't know what you're doing, these are free little templated spreadsheets that you can just click on and download. We don't ask for your phone number or anything like that. You just click on it. It'll download you a deal analyzer. Great tools. I still use them to this day. I also use, if I'm buying a rental property, I'll use the Bigger Pockets calculator. I think it's a little bit better. But for fix and flips and burr properties, these are great. Also, I do a podcast every week. Been doing it for a few years now. Very consistent, better than about a year and a half ago. I kind of took a break for a while, but every week, new episode goes up. We're mostly just talking to real estate investors or entrepreneurs in the area. Sometimes I have a co-host, Jeremy Kitchen. We just kind of talk about certain topics. But if you ever want to just hear a local podcast, a lot of people in this room have actually been interviewed there. So if you want to just get more ingrained in the community, check that out. It's actually, I think we finally got over 5,000 downloads, which is kind of cool. And it's all local people, which is pretty awesome. And then we also have it on YouTube. So if you like watching the video, it's all filmed. We have a couple different YouTube pages. My Nick Beveridge YouTube page, it's on there. And the Investor Shed podcast on YouTube. Alrighty. So, pretty big announcement. This is our 9th anniversary of doing this. 9 years today, which is pretty cool. And so for 9 years, I've been providing value and not asking for any money from you. And today that changes. I'm not going to ask for any money for these things. These are still free. But Joe and I have a really cool event plan for the fall. Thanks, Kelly, for the spoiler alert. I appreciate it. Here's what it looks like. If you go, actually, it's right on our website now, thanks to Sabra. We just released this today. You can finally buy tickets as of today. So 2-day full real estate event in the fall, September 21st, September 22nd. We priced it really cheap and we have really good speakers coming. Great speakers flying in. I would really recommend, if you want to go to this, purchase tonight or within the next couple of weeks, because we're going to be hitting the phones. We have a very big database. We're maxing it at 150 people. And we've got speakers like Tom Wheelwright. You guys know this guy? He's the next best Tom in taxes. Tom's a local celebrity. This guy's a national celebrity when it comes to taxes. Does everybody not know this guy? Nobody knows who he is. Is that right? No? Has anybody heard of Robert Kiyosaki?
Yes.
Okay. Do you know he always brags about his advisors? Yeah, some of you. This is his main advisor. This is his CPA. And this guy's written many books. I'm glad Tyler knows him. And with the event, it's $200 to go to this event. It includes lunch both days. And we're also, if you sign up before the end of this month, we'll get you a free copy of his book as well. He's got a brand new book that was just released a couple days ago.
Edition of Tax-Free Wealth.
Yeah. So we got that guy coming, AJ Osborne. He's a specialist in self-storage. He's going to be speaking. We've got Steve Rosenberg. This guy was at our meeting a month or two ago, and I think it was the best feedback I ever got from a speaker. People were texting me the next day, thanks for having that guy. It was wild. I never got that kind of feedback. So he's coming back. He'll speak more on just business systems in general. And then we've got Brad Chandler. This guy's done a lot of deals. A lot of people don't know him, but he's great. And he's more of a mindset guy. And then we have quite a bit of local experts. Sean Dolan is going to be speaking. You need to know about rentals. You need to know this guy. Take him out to lunch or just come to this event. We've got Mike DeHaan, Justin James, Chad Young, Brett Shoemaker in the back, fourth best lender in the room. And Joe and I will be talking a little bit. We'll mostly just be emceeing it. Julie Holly. That's about it for now, right? Am I missing anybody?
A couple more.
Working on a few more. Anyway, go to our website, northidahorei.com. You can click on the link to sign up. Sorry, Eventbrite charges you like an extra $12 or something. We can't control that. Maybe it's 15 or 20, but we're just trying to cover our expenses. The room and everything was like 14 grand or something like that, and then we had to buy a lot of books. We're just trying to try not to lose money.
That's not the point. We're not trying to put on an awesome event.
Trying to put on an awesome event. Okay. Any questions about that? It's cool. Anybody think they might go? All right, cool. So we're capping at 150 people. Over the next, since Audrey's brand new, I'm going to teach her how to use the phone. And we're going to call like 1,200 people within the next couple of weeks. So get your tickets quick. All right. Oh, shoot, I just clicked off that one. Okay, before Tom comes up, I'm going to show you what's going on in the market. So for the last year or so, things have been pretty steady. Have you guys felt that? What anybody feel anything different? You know, obviously like spring, summer 2022, things started to like really slow down. And then things have kind of just remained steady. Prices haven't really gone anywhere. Inventory was kind of hovering around like 3 or 4 months, somewhere in there, which is still a seller's market. Lately, we've had a lot of activity. Just last month, we were going over the TMO, and we had 3 months of inventory, which the inventory went down, right? When you have 3 months of inventory, that is half of what you should have for a normal market. A normal market is about 6 months. Like 5 to 7 months is very normal, and that means like in a certain price point, let's say 500,000 to 600,000 price point. If there's 3 months of inventory, that means in 3 months everything should be sold out. A normal, balanced, healthy market where prices really aren't moving one way or another is 5 to 7 months. And every time that months of inventory starts going down, the market just gets hotter. In just the last month, it's moved almost a full month down. Overall, we're at 2.3 months right now. And I've definitely noticed on a lot of my listings that have just been sitting there for the last few months, all of a sudden, all of them have activity. And we finally got a couple offers on some. So I've been feeling it in my business, and obviously this is a newer report that just came out. It's like, here we go again, low inventory. I think we've all kind of experienced this, and we just got to do what we can to drum up inventory as much as we can. So we need the wholesalers, we need the real estate agents, we need people to try to get houses on the market one way or another. Otherwise, prices are just going to keep going up and people are going to keep going crazy. We want less crazy people, right? You guys don't care. It's fine. What's that?
Depends if you're buying or selling.
Depends if you're buying or selling. Well, I mean, if you're selling, prices really aren't moving much. It's just like there's just less and less to pick from, less on the market. And I guess we all kind of, I don't know if we all predicted this, but we all kind of knew that with all these great interest rates that people locked in over the last decade, they're not so like hot to want to sell their house and get into a rate that's double. And so that's putting a lot of constraint on people putting their houses on the market because they don't really have a solid exit plan, at least most of them. Most of the people that are putting their homes on the market that I've experienced, I don't really know everyone out there, but just my business is people that are like moving out of state. Those are the people that are putting their homes on the market. Or they're just property landlords that are just wanting to cash out. What's that?
Or divorces.
Oh, yeah, people get divorced. Yeah. Yes, that does happen.
Half the people I've talked to want divorces.
Yes, but divorces do help with the economy. I'm just kidding.
Hey, do you know if IO is still near the top for destinations to move to?
Yeah, so a U-Haul report showed, I think we were like number 6 or something in the nation. Like Idaho, I think is like ranked 6th. But there's all these different reports out there that show different states at different places. But Idaho's still up there. People are still moving here.
Breakdown north and south where you see those.
Like northern Idaho and southern Idaho.
Completely different worlds.
Yeah, you can dig up data kind of wherever. I don't really have that available right now. I just have our local data, and it's kind of hard to show you this and say, this is how many people moved here from San Francisco, and this is how many. Like, we don't really have that kind of data because this is a non-disclosure state, and we don't really put on record publicly where people came from and stuff. So it's hard to really know exactly where everybody's coming from. And that's why like reports like from U-Haul are the most useful and helpful, because they know where trucks are going at like one ways and not round trips. And they kind of use that data
The
to,
resources, the people at D&D, get to know them, make friends with them, they'll let you know what's coming forward.
all great people. Yeah, no, that's a good point. That's good. Any questions about what's going on in the market? I don't want to spend a whole lot of time on this just because we got a great speaker. So average, average final list price is $688, and then final sold price $666. And this is for the like Kootenai County market, single family homes. What I more look at, like if I'm flipping a house or something and a certain price point, and let's say it's in Kootenai County, what's helpful about these reports is it breaks down each market into different submarkets. So if I know I have a property that's going to be priced at $550,000, I'll be more concerned with this $500 to $599 range, and know that, okay, there's 164 homes on the market in that range. 72 of them are under contract. That's almost half. That's good. 2.3 months, very consistent with the whole average. And then like this will just kind of help me dictate how long can I anticipate having it on the market if it's priced right or not. This is just the average. And what's my competition? Now, if I had a mobile home priced between $225,000 and $250,000, because that's all these homes are, I know I'm up against stiff competition because there's 6 on the market, only 1 under contract, and you're in a balanced market there. But if you were to go to luxury, which has multiple different segments, it used to just be $1 million plus, but since COVID, a lot more luxury homes being sold in this area. Now they have, this was new too. It used to just be like, $1 million plus, and then it was like 1 to 3 million. So this is interesting. But if I had a flip home that was a $2.5 million home, you're up against like 7 other people here, and there's only 1 under contract. So it's good to kind of know if you're flipping homes, what's your competition by looking at a report like that, just to kind of gauge what to anticipate for holding costs and that kind of stuff. Yeah. Okay, I'm going to stop talking because I feel super awkward being up here. And I'm going to bring up the man. All right, Tom, thank you. I'll be your clicker, don't worry. I'm just going to record it from here.
So, thanks for having me. I know a lot of you in the room already, so thank you for showing up, listening to some guy drone on about taxes, about as boring topic as he could get. So, to tell you a little bit about myself, actually, before I get into that, I used to.
Can I give you this?
Yeah.
There you go.
I used to be part of a firm that we would specialize just in travel nurse taxes. So I know where you're coming from, and I used to give talks like this for travel nurses, man. So I like to see that overlap. So a little bit about me, 20 plus years in the business, 17 of those are in that state that no one talks about. I'm a refugee. is what I like to call myself. I escaped from that place to move to North Idaho, where my wife is from. We set up the business. 2020 is our first year. We ended up winning Best New Business at Hayden for 2020. And then we ended up winning the Best of North Idaho for financial accounting categories back-to-back years. So we're pretty excited about that and constantly growing. So a little bit about me and why I'm talking to you guys about real estate tax and stuff like that. It's something that I've been involved in a lot. I've had rentals myself. My brother is a flipper. He does a lot of the construction himself. He does a lot of flips. He does a lot of subject to housing. He did some hard money lending, and my sister is a wholesaler. So again, a little bit different perspective than a lot of tax professionals. I kind of am forced into this topic a lot when we just have Thanksgiving dinner and all we're doing is talking about real estate and how I can save them money on taxes. So just one of those things that, I love to do, and where we specialize is at a little bit more tax planning and strategy. We're not one of the ones where you drop it off. I love to sit down and talk to people. If they come to me and say, hey, I'm thinking about doing this, I love to sit down and talk about how we can do things and change. So, if you don't mind. So, a little quote. I know some of you heard this before. I'm sorry. It's, God, do we really have to listen to a presentation on taxes? I said that. So, it's just one of those things. I'm trying not to be super boring, but we'll make do with it. So, couple interesting facts. I like to not just focus on stuff, but Al Capone, when he was arrested for tax evasion, he owed $215,000 of interest alone on the money that he was scamming. So if you think about that, in the 1930s, how much money was he evading from taxes? That's a pretty unreal number. The tax code is currently 4 million words longer than the Bible. So tells you some of our government's priorities right here. Ireland, this is kind of interesting, exempts the first 50,000 euros for artists because they want to give back to the community and the culture. So they get their first 50 grand exempt. I think that's kind of a cool deal. So cartoon, they tax my tax refund. That is true. If you file a long form tax return, you itemize the money that you pay to the state. You get what's called a 1099-G. I don't know if you've ever seen those when they come. Most people just disregard it and be like, hey, this is what that is. They're taxing you on your refund because you actually took a tax deduction for it in the beginning. And so they're taxing it coming back. So pretty sweet. So I've actually talked in front of this group 3 times now. I tried to, one of the times I talked about the importance of LLCs and different types, partnerships, S Corps. I've also talked about real estate investing, capital gains, capital losses, active versus passive, short-term versus long-term. So I was trying to think of what is a new topic that it will relate to a lot of you guys, and what do a lot of people ask me? And it's real estate professional. How many of in this room are real estate professionals? Pretty much everybody, when you think of it, in here has something to do with real estate. We're either wholesalers, real estate agents, we're lenders, we're in the trades, we're something in that. But what does it mean tax-wise to be a real estate professional? Because that's different than just being a real estate professional. So in that, there's some benefits to being a real estate professional. There's tax loss harvesting. And usually a lot of the times when people think of tax loss harvesting, they think of stocks. Okay, I have a bunch of crummy stocks I invested. They're now worthless, and now I'm going to sell them to try and save some tax dollars. Well, we could talk about how we do that with real estate. Tax shelter, how do we not pay so much money in taxes. That's always a big one. And no income limitation on real estate losses. So pretty big deal, pretty big topics on that. So how does it work? This is just two examples. This is something I see every day of my life. And I'm just kind of laying the groundwork for something I'm going to get into a little bit more. So property one, this is a rental property. We have $30,000 of income. We have net income of $15,000, which we have our mortgage, we have our real estate taxes, we have HOA fees, we have utilities, whatever we have into that property, and we have $15,000 net profit. Then we have depreciation. Depreciation is a huge useful tool, especially when it comes to lending, because we can actually add that money back. But our taxable income on this property is $5,000 because of these deductions. Same thing here, rental property number two, exact same thing, except for we have a $20,000 gross, and so now we have a $5,000 loss. And this is a big deal when it comes to real estate professionals. Real estate professionals different. You can take a paper loss, so a loss that I just showed you that may be caused by depreciation, you could take that against ordinary income. Huge deal. Rental properties are still cash flow positive, so that means your lenders are still giving you money for those properties, but we're not paying as much money in taxes. So here's another example. We have $100,000 of income. We have the $5,000 loss from property two. That makes our total income $95,000. But for cash flow purposes and lending purposes, we actually can add the depreciation back, which means we show a profit for the lenders of $105,000. So we're paying tax on 95 compared to 105, which is what we're going to show the lenders. This was kind of confusing writing it out, so bear with me, I'll explain it a little bit. But real estate professional earnings $200,000. And I wanted to break these out just a little bit, but they have two rental properties. The first rental properties has $10,000 prior to depreciation net rental income. Property two has $30,000, and I included the depreciation in there just so I could break it out and show you guys the difference. Let's say this one has none. But this property, let's say they do a cost segregation study. I'll get into that a little bit, but are all you familiar with cost segregation studies? Not a whole lot of hands. So I'll talk a little bit about that. But let's say we do a cost segregation study and we take accelerated depreciation of $75,000 in this thing. So for cash flow purposes, we have $200,000 of earnings from real estate professional. We have net profit of $10,000 off this rental and net profit on this rental of $30,000. So we come over here and same exact income, but it's $200,000. We have $30,000 of rental income, and we could take the net of the $10,000 income against the $75,000 of the cost segregation study, which means for loan purposes, we're at $240. For taxable income purposes, we're at $165, saving a taxpayer $18,000 in tax. So, huge deal. It's one of those things that takes some planning, takes a little bit of strategy, but if you can make the requirements, you can see how beneficial that'll be for you. Real estate professional. I put two major rules on here because this one is actually kind of broken up into two, but there's three rules. 750 amount of hours. So that means that for real estate related purposes, you have to invest 750 hours into real estate activities. That could be rentals, that could be trades, that could be lending. That could be a number of different things. It doesn't have to be one specific, but you have to have 750 hours. The other one is 50% rule. That means that real estate investing or real estate professional is over 50% of what you do professionally. And I'll talk about that a little bit more. And the other one is material participation rules. This one kind of falls under those ones, and it's oftentimes missed. But let's say I'm trying to take a loss on a rental property, but I don't have any material participation. I hire a property manager. They do everything themselves. I don't have my hands in that rental at all. We don't qualify because we're not materially participating. And I'll talk a little bit more about that in a second. So becoming a real estate professional, IRS Code Section 469, after specified threshold, which is 150,000, you can't take real estate losses to offset income unless you're a real estate professional. So again, it's important. I know you guys don't care about the code sections, but it's one of those things that I dive into. So what constitutes real estate activities? Real estate agent or broker, property management, renting, flipping, wholesaling, constructions, trades, and any other thing that you can be creative and we can go to court and say, hey, this is related to real estate in some aspects. I'm willing to look at it and give it a try. So one of the things, and I'll talk about in a second, is about court cases. But when you come to me and you say, hey, Tom, I had 10,000 miles. I would say 1 in 10 actually keeps a detailed mileage log. I'm just going to be honest with you. So what do I do if you're audited? Very simple. We create one from scratch. Hey, met with Tyler on this day. We talked about doing taxes here. Hey, met Nick here. We went and talked about stuff there. Hey, went to a networking group. We talked about this here. And we kind of create it from scratch. I use a calendar that I buy off of Amazon for $1 because it's old. And we recreate that, and the IRS accepts that. That's the way it works with a lot of logs when it comes to the IRS. I've had 20 mileage audits over the course of my years, and we've won 19 of them. The one that we lost was a 72-year-old man that says, I'm going to die anyway. I'm not fighting it. We're just going to pay the tax. So when it comes to logs for the hours, this is where, because people are taking such giant losses, this is where the IRS really does get into the nitty-gritty of exactly what constitutes into that time. So they have disallowed people for saying, all right, I spent 30 minutes today on real estate activities. Well, did you round up? Did you round down? How does that work? So they want a little bit more detailed time. Hey, I spent 10 minutes, so a little bit more detailed, and you have to do it while you're going because this is something that's going to be hard to recreate 3 or 4 years down the road when you're being audited. You're going to have a hard time coming up with, oh yeah, on that specific date, I went to a real estate investment meeting and that counts for my hours. I went and met a client at a rental property for a potential sale or to put it under contract. There's going to be different things that you're going to have. So even if you're not detailed on it, at least make notes and come up with kind of an outline so we can kind of fill in the colors later. Second log, separate from the first one, about material participation. Again, this is kind of a big deal when it comes to that, and I'll show you some court cases in just a second, but basically if you have a rental property, you can have somebody manage it and still be able to qualify if you can meet material participation. Maybe you went in and you replaced the washer and dryer yourself. Maybe you went to the property and did a few things So you can still meet that material participation. It's a lot harder if you have a property manager, but you can still technically do it. Yes, sir.
If you like live in the property, is that counting against material participation just for like the time being when you're setting it up or whatever?
So that's a good question. With that, I always recommend, because I've done this for a long time, I always recommend if you're going to live in the property yourself, get a property manager, because otherwise that person's calling you at 3 a.m. and being like, hey, come fix my stuff. But as far as this goes, you have to dedicate time specifically for those other units. So anything that you're doing on your own, for your own property and your own stuff, you can divide the time if it's for the whole property. But yeah, make sure that you specifically say this is for units A, B, or C, whatever that stuff is on it. And I have a huge hard time with deducting mileage, going back and forth to like Home Depot or, stuff like that if you're doing it a lot, because again, you live there and you have to have detailed records of how that is. And it just honestly depends on the or the auditor sitting across from the desk. If I have a gut feeling that says, all right, they're kind of easy to work with, or hey, this guy's going to be a ball buster, it's one of those things to see how aggressive that would be. And so how does that help me now? It depends on how aggressive you want to be on it. And to me, it's one of those things that I don't really try and push if I'm renting it myself. There's other ways we can save you money that's more beneficial, I feel, on that.
Is just using like a Google Calendar sufficient enough?
Google Calendar is fine. Notes is fine, but just something to keep, like Eric has a notebook here. Anything will do. Oh, sorry, Jeff.
Sorry.
Sorry, man. Anyway, any of that will do. You just have to keep track somehow, some way. Again, I use my calendar, my wall calendar at the office, and I literally will just write out where I've been or what I'm doing, especially if it comes to real estate.
So if you're using,
You're good?
if you're using an actual calendar, not online, so do you just recommend just keep all your old calendars with like your tax stuff?
I sure do. So,
I'm sure a lot of people just throw away their calendars, right?
yeah, to me, those old calendars are pretty good, especially if you're self-employed or a real estate professional, because we could use them to make up a lot of stuff. Other people that I have keep detailed records on their calendars, as a lot of times waitresses or waiters will get tipped out incorrectly, or they have to pay back tips, and that's all done wrong. So I have everyone write their tips down at the end of the night on their calendar.
And going to events like this count for this, right?
Definitely counts.
What about like a 2-day real estate seminar in the fall?
That counts double.
A lot of hours.
Yeah. So yeah, a lot of hours. That whole event will meet the requirement for doing stuff like this. Yes, sir.
So if you're in construction, you're kind of doing GI work or, set tile or whatever, does that count as?
Yes, sir. Yes, sir. So if you literally punch your card in every day as construction, that counts as your 750 hours. Yes, sir. So,
Wow.
all right, if you go to the next one. All right, so some tax court cases. So in these two kind of go hand in hand a little bit, but the IRS denied traveling to rental properties as part of the test. So I have rental properties, they're in Sandpoint, and I'm driving up there to go visit those properties. The time in your car does not count. However, this person lost the court case. Had they had a bona fide office, they just kind of worked a little bit out of their house. If they had an established home office, there was a dedicated space, or they were at Keller Williams and had a desk, they came in, checked into the office, and then went to go to those rental properties, IRS said that would have counted. So a little bit hard distinction there. But if you're really trying to rack up hours and you're kind of close on that, that's a pretty useful tool to have an office, go check in, and then go. How do they know that? Again, detailed logs.
Sorry, just curious. So I have an office in my backyard. Would that somebody? I'm honestly I'm a real estate broker, so it doesn't really matter. But for somebody who's just they don't like have an actual office, but they have like a separate space on their property. Is that
Yeah, so home office audits were actually one of the weirdest things that you would do. The IRS auditor would actually show up to your house, go through your bedrooms, see if you had a dedicated space. Pretty awkward to have an IRS auditor agent in your house. Now everything's Zoom. So they do the same thing through Zoom, which is almost worse. But yes, if you have a dedicated office in your home or you have a space, there are some rules. So let's say you have one studio apartment where there's one bedroom and everything's open. How do you facilitate that? There is a lot of stuff, but you do have to have a dedicated space in your home office, and that would qualify even if you're traveling. But again, log, hey, I checked into work. I am looking at different things. All right, now there is a problem at the rental property, and now I'm driving out there to go see it. Instead of being in the same home, hanging out with my kids, and then now going. So I don't know how they differentiate that between that, but again, it's all about logging in on the paper.
Well, it's nice about like Google. Sorry to keep it.
You're good,
But
man.
if you use a Google Calendar, you can just hit a repeat event. Like, hey, I work for 2 hours in my office Monday through Friday, and you can just set that up on a repeat, and then you're logged for the year, right?
Yeah, but remember what I said. It's 2 hours and 14 minutes.
Right.
Don't round it.
14.
Yeah. And then the next one is unless you can prove managerial experience traveling to the rentals, you also can't do the test. So a lot of times I'll have somebody come in and say, hey, I drove to Kellogg to go look at my rental property. And all I did was drive by and I checked it out. And yeah, it's still standing. It didn't burn down. That doesn't count. You actually have to physically do something. So knock on the door. Hey, tenant, how's it going? Is there anything I could do to help you? You're still checking on the property, but the distinction there is you're not just driving by and looking at it. You're actually participating in that. And again, these are actual court case memos from tax court. I am a little weird when most people are at home sleeping and doing whatever. I'm looking at tax court cases to see how IRS ruled on specific things, to see if I can help my clients worm their way through some things.
So on that scenario, like if you do just like to go check out your properties every month or so, what if you just like dropped off an air filter every month?
Yep.
Does that count?
That would count for sure. And again, the commuting mile or the commuting time, if you had a home office and you did that same thing, those hours would still relate into that. Okay, so this one was kind of a weird court case. Is 2006. You could tell by reading the court case that the judge was pretty flippant with the person in the court case. So reasonable means, the person said in the court case that they had reasonable means to be at this real estate activity. They had reasonable means to be there. And the judge said, that's a pretty broad area to say what that means. But he never detailed out exactly what that is. So to this day, it's super broad, and you can come up with puzzle pieces to fit the mold, and you're still in good shape because that judge left it open so broadly. But he also said ballpark guesstimates do not count. So he was the one that basically those logs that I'm talking about, a little bit more detailed for these ones. He's the one that basically made that to where the standard is today. Tax, this is a huge one. This is the 50% rule. I was talking about that earlier. So how that works is the IRS says in 2012 that if you have another job where you're working full-time that's not real estate related, and they gave an example of a firefighter who works 3 consecutive shifts and then does real estate the rest of the week. They do not count as a real estate professional even if they meet the other tests, because they're not over 50%, because their main source of revenue, their main source of income is from that fire department. They also used pilots to kind of demonstrate that as well. But basically, anyone who has a full-time job does not count as a real estate professional unless they're in the trades.
So is there an hour limit to constitute a full-time job?
So so like in the case of the firefighters, like there's 3 12-hour shifts. That's 36 hours. They still wouldn't count that. So they didn't really get into the amount of hours. But if it's a full-time employment, so I would say anything 30 plus, I would say right out the window on that.
So even if you're a real estate agent?
Real estate agents still qualify because you're in the real estate activities. This is for, like me being a tax professional, I'll never qualify for a real estate activity. Home inspectors would, construction would, I would even say lenders would, again, using that reasonable means broad category. They're dealing with real estate every day. To me, I would still qualify that as being in there. And more tax court cases. So this one was pretty huge deal. So spouse was a licensed real estate agent, and this court case is super important for a couple reasons. So the husband material participated in the activities and the upkeep. So the husband in this case didn't have a job. He worked and helped maintain the facilities, and they deemed the husband as a real estate professional, even though his main source of revenue or he didn't have a job in the trades. He qualified because of his participation in that. And the other thing that this court case had is it was okay to hire a contractor or someone else to come in and fix the properties and stuff like that. You don't have to do everything yourself. You could do some of it yourself, still hire some of that, and still meet the real estate professional rules. This one, Chambers, this one was a huge deal, not just for real estate, but for other stuff as well. They deemed that the limited partner, which is by definition not being a material participant in a company, was able to materially participate if the activity involved real estate. So if they helped out with the company, they did minutes, they did a few other things, then they would still be able to qualify. But they ultimately lost the case because they didn't meet the hours requirements. So they had the right mindset. They were on the right track. They just didn't keep the logs good enough to maintain that. I feel the same way you guys do, okay? Tax court cases and all these different laws, like, man, this sucks. Like, I'm in the same boat as you guys, so I feel the same way.
You got coffee and cookie in the back.
Yeah. All right, so some tax planning stuff. So huge losses coming, drop the time requirements. So let's say I know that I am gonna have a property where I'm gonna get fleeced and I'm gonna end up with a huge loss. Well, maybe it's time that you take your full-time employment just for 1 year when you have those giant losses and you move to part-time. Yes, you're putting less money in your pocket, but if you're making $400,000, you work part-time and now you're working $200,000, and we can take an $80,000 cost segregation loss, then that's a huge change in taxes. So it might be something we're doing. Going back to that last court case, what if your spouse doesn't work? What if you're the breadwinner and your spouse doesn't work? Have them meet the requirements for the hours. You still qualify for it on a joint tax return. So pretty big deal when it comes to that. If you have higher earnings, acquire a new property. So if I know, hey, we're gonna crush it this year, we're gonna make a lot of money, I meet the real estate professional requirements, buy a new property, then do a cost segregation, and then take all the depreciation accelerated up front and offset that high earnings on that.
What is cost segregation?
So I'll talk about that in just a second, but just a snippet, it's basically a way to accelerate certain items in your house, rental house, for accelerated depreciation. So it's a pretty useful tool on that. Offset rental gains and losses, that one's kind of self-explanatory. And then one thing I wanted to make sure that I talked about is real estate professional and dealers are completely different. Dealers are, if you're doing flips constantly, that doesn't become capital gains tax. You actually have to pay active income off that, and you end up paying self-employment tax off those flips. So make sure that's a little bit different. But Will Rogers said the difference between death and taxes is death doesn't get worse every time Congress meets. So I feel that's true. And then cost segregation studies. So I won't bore you with this whole thing, but basically what a cost segregation study is if you buy a rental house or investment property, you can break it out into different nuts and bolts. So my roof is this, the framing is this, the washers and dryers are this, the shed on the property is this. It basically breaks the entire house out into different categories of assets. You've got 5-year asset, 7-year asset, 15-year asset. One thing it does is it does change the 27.5 depreciation rules for the years, and it makes it 39. So the reason why we would do that is to offset big gains and to basically claim a lot of deductions at one time, especially if we meet these real estate professional requirements. The next slide, this falls under the FedEx rule. So FedEx years ago sued the IRS. It went all the way to the Supreme Court because the IRS said if an engine goes out in an airplane, they have to restart the entire clock on the depreciation for the entire airplane, and they have to depreciate the whole thing. And the FedEx sued and said, nope, that is a specific part of the plane. It doesn't make up the whole plane itself. And so this is able for us to do cost segs and some other stuff because it allows us to break out the assets separate than the overall thing of the house. So doing a cost segregation study, just from a logistics standpoint, you're basically moving a lot of items up front and taking them 5, 7, 15 years, which means you're going to take a bulk of that depreciation right now. We're going to offset income, we're going to take that, and we're going to do that. If you hold it for longer, then the amount of depreciation will drop off because you took everything up front. So it's a little bit of a strategy. It's something that I liked my clients to talk to me about before they just jump into it. But I have some that do both. So
When you sell it, does it get recaptured then?
yes, all depreciation, whether accelerated or standard, is recaptured. And the way that works is depreciation recaptures 25%. So if you have $100,000 in depreciation, it's $25,000 off of that, and it's taxed at long-term capital gains rate. So you're paying 15% off the $25,000. So 15% of 25% of the total amount depreciated. And depreciation is what's called allow or allowable, which means if you say, hey, I don't want to take depreciation, I feel like I don't want to pay the depreciation recapture, the IRS says, we gave you the opportunity to deduct it, you didn't, you still have to pay tax on it as if you were to have taken it. So take it, so that way we're not paying tax on something we never did. Yes, sir.
Just to recap real quickly, if you do a cost seg, say on a large expensive house, then the remaining stuff that you didn't do accelerated depreciation on, you have to do it 39 years instead of 27?
Yes, sir, because it moves to commercial instead. That's the way that they have broken it out, but yes, sir. And then if you get a professional cost seg done, they'll actually show you, and yeah, it'll be 39 year on on the remainder of the frame, the house, the structure, the concrete, everything else.
You have firms that you recommend that do a cost seg?
I don't, but I know some of the people in here. I know Joe for sure. I think she's done some by herself and professional has done it. So I'd ask her. She'd be a good resource on that. Has anyone else done any cost segregation studies?
I would ask you if you've done it.
No, Tyler. Yeah.
I've given them all to you. So here, Tom.
Yeah, but I don't do the actual study. Who do you do?
Get on the DIYcostsegs.org.
So they have DIY ones that are actually pretty good. The ones that Tyler have given me have been like a 20 or 30 page book that literally breaks out exactly everything in there. The professional ones will cost a little bit more. The DIY ones are plenty good enough for an IRS audit. So to me, save the money if you want to go through it.
So would you recommend, like, before you just jump into doing this right away, would you sit down and figure out if it's even worth it?
So to me, if a client comes in and says, hey, I want to become a real estate professional. Well, what is the reasons why? What are we doing? How are we trying to save money? What does our portfolio look like? Are we trying to acquire more? This doesn't mean I'm a real estate professional this year. I'm a real estate professional forever. So you could do it year by year, strategy by strategy. But yes, I always recommend come talk to me or talk to a professional. This is what my goals are for the year. I'm coming into a lot of money. I'm thinking about buying stuff. What do I do to help save money in taxes? If that's the case, then this is a great way to tax shelter some of the money.
Are you going to talk about the, I don't want to call it a loophole, but it's basically like for short-term rental owners, like if you work at W2, you run a short-term rental, and you qualify for all that stuff, you can also think you can take a loss on your W2.
So again, with short-term rentals, it's different. It's completely different. So short-term rentals, most tax professionals get this wrong, but it's active income. It's the same as being self-employed. So if you have a short-term rental, you technically should be paying self-employment tax off all the gain. So with a short-term rental, that loss is automatically done. This is more for long-term rentals and stuff like that. But yes, sir, that's absolutely the case.
Does the 1031 home recapture?
Yes, sir. So 1031 bundles everything up nice and neat. You kick that can down the road. So what a 1031 exchange is, if you guys don't know or are new, basically, instead of paying the taxes on a sale, you roll that into the next property. So there's a 45-day rule, which means you have 45 days to select up to 3 properties. Doesn't mean you have to close on all 3. Doesn't mean you can't do more. It just means one of those ones has to be in the 1031 exchange, and then you have 180 days to close on it. And if you're moving into one that needs the construction through the loan and through everything, it still has to be done through trust through the escrow office, but everything has to be closed or settled within 180 days. And what that does is it takes all of the gains, puts it into this next property and defers it. And you can do that time and time again. And then if you pass away and leave it to your kids, they get a step up of basis at date of death, and not a single person ever paid any capital gains tax. So there's a lot of strategies and planning there too. You can actually do a reverse 1031. It's a lot harder. There's not as many escrow offices, but you could buy the property first and then do it reverse. Just make sure you talk to the escrow office first and to a professional first on that as well.
How much time is it in reverse?
Same rules apply. Yep. So, yep, it's lightning fast. I think over the 22 or 3 years I've done this, I've had one. But it is an option if somebody finds a killer property and is like, you know what, I'm going to dump this other one. But that's a hot seller because they need to close like right now. So, well, that's it, guys. Thank you. Yes, sir.
What's the environment for audits right now? Are there lot of audits, that's not.
So this is something that I've talked about, especially with real estate agents. So the average audit rate right now is about 3.5%. That's even with them hiring those 87,000 armed law enforcement officers. It's still about 3.5%. Real estate agents, real estate professionals, the audit rate jumps to about 4.5%. If you incorporate, you set up a corporation partnership, something like that, that audit rate drops to 0.34%. So huge drop if you are a structured entity besides a sole proprietor. But still, when you think of the random poll audits and stuff like that, really not too bad to lower rates. When I first started 20 years ago, the audit rate was about 6%. So we're about half what we were a couple decades ago. So to me, efficiency and manpower on the IRS. If you call the IRS tomorrow in the midday, you're going to be 3.5 hours on the phone. Once their phones get completely full, they do a power shutdown and drop all calls. I'm not exaggerating. And then you have to re-go into the boot. So there's tax remedy people I partner with, and they pay people full time. It's probably through a computer, but they call the IRS every 5 minutes. And then so when they call, they actually take that allotted slot time so they don't spend that much time waiting on hold for the IRS. They pay somebody to keep calling, and then if nobody picks up, they just drop it out of the queue. So yeah, pretty sweet. So thanks, guys.
Thank you.